Hello and welcome to Maverick Dreamers and Thinkers. I'm Chloe Cho. In this bizarre time of social distancing, border lockdowns, and financial market distress, investors tend to park their money where it's safe, therefore flock to safe haven assets such as gold, high-rated government bonds, and supposedly Bitcoin or digital gold. Bitcoin and a whole host of cryptocurrencies emerged more than a decade ago after the global financial crisis and were billed as the hedge against inflation, the hedge against financial calamity, and the hedge against global economic volatility. Yet what's played out in reality lately has been far from that narrative. Why?
I don't think it's just going to be unique to digital currencies. We're going to see the same transposed into the traditional world as well. Like, who wants to hold South African rand right now? Who wants to own Turkish lira? If you look, we're already starting to see a breakdown in the fiat system in a number of countries across the world.
This is a very unfortunate crisis, but as all crises, they go away, right? They will go away and we'll get back to normal. The global economy is going to take its hit. But we've seen this before. We've seen the game, unless there's something I'm unaware of, and we will eventually come back. It's just a question of the amount of time.
Amid a global dash for cash, cryptocurrencies have been in a violent rout, dispelling its supposed safe haven status as coronavirus panic grips global financial markets. Proponents are unwavering in their belief that cryptocurrency's underlying blockchain technology is the future, as it can move money faster and more transparently without middlemen and simplify the bureaucratic procedures. However, as Bitcoin, Ethereum, and other cryptocurrencies get swept up in a volatile roller coaster ride, it's leaving many restless and anxious. Such was the mood at JST Capital, a cryptocurrency startup with offices in New York and Singapore. As I dropped by its small office in Singapore's central business district, half of the staff were working from home, and one trader was still stuck in China since heading off to visit her family in Wuhan just a week before the Lunar New Year break in mid-January. In these unprecedented times of social distancing and remote working, Todd Morakis, a co-founder and partner, says one needs to be resilient, having endured numerous crises in his 30-year banking and trading career in multiple cities around the world. So you're used to the rough and tumble of the financial world.
Most people that have been in the financial business for long periods of time, they should be used to it. If they're not, they shouldn't be in it anymore.
Yeah, so this period is being described as really the worst since 1987, the famous Black Monday. As someone who is so used to this, the manic volatility, does it feel different?
Not really. I think I've lived through the internet crisis,
the
dot-com crash, the Asian crisis before that.
The global financial crisis.
The global financial crisis. And this one's quite interesting. Is this like a 9/11 event? And this all goes back to me, I look at cycles. And cycles clearly get shorter and shorter. But when I look at the stock market, it wants to rush either its way to the bottom as quick as it can and then turn around and stay there, then go back up. While in the past, we wouldn't necessarily see it selling off as much.
I really believe in that saying. Markets go up in an escalator and down in an elevator. I think that saying is so true.
Yeah, and I think even now when we're seeing the volatility going up and down in the equity markets, I even believe today it's not limit up, but now everyone's buying it again. So everyone wants to sell it one day, everyone wants to buy it the next day. And this is a normal crisis. Things have high volatility. People are getting out of their leverage. And that's the biggest thing in all these markets during a crisis. It's about leverage.
So when people deleverage, it's bad for risky assets. And somehow, crypto is supposed to be a safe haven, but certainly has not been behaving like one.
Best way to put it, in a crisis and a delevering, they get rid of any asset. And what we've noticed is the easiest asset to get rid of is either a safe haven or it's the asset that's staying up. So gold, for example, if people need money to protect either their accounts or they're getting called, they have to get money. They have no choices. So it doesn't matter what the asset is. So during a crisis, this one was a bit of a violent crisis. You have no choices. You hit whatever you can. Because right now, crypto, even though the asset class has been growing, And we saw in 2019, it didn't perform that well during the beginning of the year and the middle of the year, and then it slowly started picking up again. But we still all have to understand that this asset class is small. And just like when we saw Bitcoin go up to 20,000,
Yes.
around that area, I look at it as it's a funnel. Either everyone's trying to get in the funnel, everyone's trying to get out of the funnle. And there just isn't enough
So
space.
where are we in the funnel? It's sold off a lot.
We saw the lows, which were close to the lows last year. Might have actually been a little bit lower than the lows last year. And that was leverage. The people that are in it may have had the positions they've had on. And with the new real money that has come into this market, or new retail money that came into the market, we're not used to this volatile swing, or they assumed the liquidity would have been there, or it wouldn't have moved from the high to the low about 70% during the year.
So it's basically margin calls, and then you sell whatever you can. It's a kitchen sink, essentially.
Yes, it happens in all markets. It's all about leverage. Once it's delevered, then people settle down, figure out what they're going to do, and the market gets back to normal. It trades in lower volumes. And we have been seeing that yesterday and today, but it will eventually pick up again. We do see people that have interest in it. And just because we're in the middle of the crisis, there will be certain investors that look at this as an opportunity.
Of course.
And I think that down here, people are looking at it as an opportunity. May stay down here for a bit, or may stay in a range. But when it was sitting up at 9,000, I'll just use Bitcoin as the example right now, or 9,500, the amount of people said, well, geez, I wish I got in lower. Well, here's your chance. So during a crisis, that's what you do. If you believe in the asset class, you believe in the story, if you fundamentally believe in the technology, you buy. And that's similar to what we're seeing in the equity markets also now.
As cryptocurrencies get embroiled in the market mayhem, prices of Bitcoin tumble to as low as around $3,000 in mid-March, far from the all-time highs of close to $20,000 more than 2 years ago. But Bitcoin and other top cryptocurrencies such as Ethereum, XRP, Litecoin, and Ripple have bounced off those lows in response to a wave of stimulus from top central banks to stabilize battered financial markets. Louis Curran, a seasoned FX trader who serves as a partner at JST Capital, says the recent rout was a well-deserved shakeout. Do you think maybe there will be a shakeup even in the crypto space? Because if you have 1,000 digital coins and half of them are considered essentially gunk, maybe a lot of them won't survive. And it's a great shakeout. Survivor of the fittest, Darwin theory.
Well, I don't think it's just going to be unique to digital currencies. We're going to see the same transpose into the traditional world as well. Like, who wants to hold South African rand right now? Who wants to own Turkish lira? If you look, we're already starting to see a breakdown in the fiat system in a number of countries across the world. If you look at traditional foreign exchange markets, the thing that initially brought them into this space was volatility, number one. And number two, carry or interest rates. Both of them have collapsed. FX vol pre this crisis was down at 7. 5 years ago, it was at 14 or 15. Carry interest rates, pretty much everywhere in the world now has zero interest rates. We don't know which token or currency is going to win out in that space. It may not be some of the traditional ones that we're looking at. It may not be Bitcoin.
Bitcoin, why isn't it outshining as in the US dollar? So if nobody wants to buy the Turkish lira, nobody wants to buy the South African rand, the Aussie Kiwi dollar is fine. Why isn't there a clear breakthrough in some of these leading cryptocurrencies like Bitcoin, Ethereum?
Sure, you're absolutely right.
It's a herd mentality. They're completely trading in uniform fashion.
If you look at the last 2 years, we've learned a lot about how people look at digital assets and digital currencies and how they perform. Take April last year, when the second round of sanctions were announced against Iran, people were worried that the Americans were weaponizing the dollar. Why? Because if Iran chose to sell its oil to a country and get paid in dollars, the Americans could intercept and intercede in the dollar payment process. People became worried that the dollar's strength in terms of its fungibility in international trade could be threatened by the DOJ sequestrating the dollar assets that were being transferred from A to B. So Bitcoin took off on that occasion. But now in this situation, why has Bitcoin not performed recently? And it's a big question. But it's not just Bitcoin who hasn't performed. Look at gold. It's important. 2015 to 2017, China feared for their sovereignty of their currency. And now they're about to launch the first new reserve currency program since the euro was launched. It's the first major currency program. Do you think that they're going to let anything threaten its existence?
So you think the Chinese are not buying gold, and that's why?
I think the Chinese, are selling gold, number one, because it's in their interest. If you look at a long-term chart, we're right up against levels that gold against the CNY for the last 15 years. We're at all-time highs for that cross. So that's one. There's a reason for the Chinese to keep the yuan strong by selling gold against the yuan. Capital outflows for China have been a major threat to its stability and sovereignty. And Bitcoin is an endemic threat. It may not be huge, but it's representative of flows. So right now, 2020, we expect a new digital currency program.
China's plans to launch a digital currency have been in the works for the past 5 years as part of its efforts to digitize the renminbi. The People's Bank of China, the central bank, has filed more than 80 patents related to its secretive plans, and the goal is to integrate the digital currency into its existing banking infrastructure. Louis believes that China's cryptocurrency will be a game changer for the entire industry. Why is China coming into the market so important? The market is crowded. 1,000 different kinds of cryptocurrencies, Ethereum, Litecoin, Bitcoin, there's Ripple. What makes a difference if you throw another one in?
How about you throw one in that becomes the supreme digital currency?
You think it's going to be the Supremo, the real big one?
If you look at a compendium of currencies, whether they're digital or traditional, the world has been engaged in a currency war for the last 15 or 20 years. The world has been dominated by the dollar. Movements of capital move through the dollar. And China is at the other end of this, always at the wrong end of dollar control. It's no surprise that a US Treasury Secretary many years ago coined the phrase, the dollar, our currency, your problem. It would be only natural that China would like to try and launch their own currency.
It's probably not a good time to launch, given that cryptocurrencies have been sold off completely in wholesale fashion. Maybe even the crypto market needs circuit breakers in times like this. China coming into the market, what will it do to a very heavily battered market?
Credibility for a central banker is something that once you establish it, it's something that should last you for 20 or 30 years. So you're talking about the opportune time for China to come into the market to launch its digital currency. Right now, 2020 is the fourth of a 5-year cycle where China tends to change its FX regime. What better time for China to establish its currency's credibility? That is, an event that started in China that has created a wave of risk off across the globe. But just look at how the Chinese currency has traded over the last 6 weeks. It's been strong and stable. And this is a bellwether of what they're trying to do, make the yuan a beacon of stability. In fact, one of my strong-held views is that ultimately what China wants to do is to make the yuan a stable coin, that it isn't volatile.
There's a lot of worry central banks have exhausted all of their resources and they have no more bullets, which is why you have a stampede of sell-side orders coming in despite whatever the central banks announce. If so, can cryptocurrencies, despite the volatility that we see and the manic pressure in selling, could it actually emerge as a real winner?
My personal belief is that this digital currency program is the most important thing in China since the Cultural Revolution. They cannot fail and they will not fail. And so when you launch a digital currency with the biggest holder of crypto in the world being Chinese retail customers, you could clearly see there was only room for one winner.
Yeah, but regulation plays a key role. If you look at projects like Facebook's Libra, government regulation got in the way. As somebody heavily involved in this space, trying to work out an investment banking business model out of cryptocurrencies, how do you go about it? Regulation is critical.
Exactly. When China launched its digital currency program, Bitcoin started to move from 11,000 all the way down to 6,000 during 2019. What China has done effectively, with Xi Jinping making a very famous statement about the importance of blockchain to the Chinese economy. And so regulation has started in China, or an infrastructure or ecosystem state-sponsored. What's really, really interesting to see how the rest of the world has reacted. Up until 2 months ago, the Americans, that's Mr. Powell and Treasury Secretary Mnuchin, had a policy in relation to the digital dollar that it could wait. Lael Brainard, now on the Federal Reserve Board, only recently changed the policy and said we really need to get to grips with the digital dollar, number one. But more importantly, the lead regulator in the global space of anything financial is the SEC. Hester Peirce, who is a strong advocate of digital currencies, has criticized her own institution for their failure to regulate. What's the point? China has led the way, and now America, through regulatory arbitrage, are being forced to catch up.
It's not just the U.S. Central banks around the world are playing catch-up alongside non-government entities to develop digital currencies. The move reflects fears that China might become a huge force in financial innovation and global influence and could impose its system on the rest of the world. The dollar oversight may not vanish overnight, but China's digital currency is likely to offer an alternative. Although China has no plans to remove capital controls, a key stumbling block to internationalization of the renminbi, Louis says China's digital currency plan is to serve that purpose.
China has always suffered from capital outflows. At the base of it is China property rules. If you own a property in China and you make a profit on your property in China, it lasts for as long as you own the property. And China property rights refer back to the state after 70 years. So there's a constant outflow of capital from China because people booking their profits on their property need to find a home for it. And China needs to cut that short-circuit that process.
As the world awaits the first sovereign digital currency, China's DCEP, short for Digital Currency Electronic Payment, is likely to shake up the crypto space in coronavirus distress. Based on what's known through the patents filed by China, DCEP will be pegged to the yuan and will be distributed through banks and the monetary system, making it fully centralized, much like traditional money. This is different from Bitcoin and other cryptocurrencies that are mined through a decentralized source and controlled by an algorithm. Its underlying technology, blockchain ledger, will also be government-controlled and not distributed across the system, rather integrated through the commercial system. How will a yuan-backed digital currency impact the crypto market?
In these times of fear, you notice that even oil, it's a physical asset. Brent easily could go down to $20 per barrel. So even when a physical asset doesn't get the demand, the traction that it usually has, and is really trading at levels unseen, can something that's digital, that's something that is intangible, continue to get traction, continue to command a higher premium?
Whether it can command a higher premium in the short or medium term, I think one of the things that's really important, as I said, we don't really know yet how the architecture or the ecosystem will look 5 years from now. Just think about it. Libra was launched in July last year. How often do you hear people talking about Libra today? I joined markets in 1992. I've seen more change in crypto or digital asset markets in the 2 years or 3 years that I've been in this space than I did in the traditional markets for the previous 20 years. The rate of change of our industry is unbelievable. And to be able to prophesy what will be the winning digital asset, nobody knows. But what I will say to you is that the world is going digital. The winners and losers will be defined by he or she who digitizes first.
Given the pace of disruption and change in digital finance, it's tough to prophesy the outlook ahead. But times of distress are always both an opportunity and a crisis, and JST Capital says it hopes to capitalize on its management's vast experience in investment banking and FX trading by offering some structure and bespoke solutions to clients in the crypto landscape where cowboys run amok.
How do you guys make money?
We service our clients. So we'll help their needs, usually with bespoke solutions. So they might have some risks, and then we try and help them with those risks, and they make a decision on which of our solutions they want to choose. Some just want to trade back and forth, and we help them facilitate the trades where we take that risk on and we slowly get out of the risk. That would be one side of our business, our client side of our business. We also have we help their treasury functions, which is part of helping their treasury functions, understanding their risk exposure. We also do risk advisory.
And then you guys get a fee, sort of like investment bankers.
Some are fee basis, which would be when we market make coins. Others are when we provide a solution or when they want to execute, it's just a bid offer. So once we incur the risk, we can either lose or make, right? And so that's our risk expertise. But that is one side. That's our client side of the business. Then we have our asset management side of the business, which is more the investment side of the crypto space, where we focus on, I would say, mainly the top 5 or 6 coins in liquidity. And we plan on slowly moving out the curve. And we partner with a lot of people while we invest. Our job is to use our expertise to help you to succeed in your business. And we will do the best that we can in that.
So in this world where yield is evaporating very quickly, even the 10-year U.S. Treasury yield, it's probably not an impossibility to see it go right down to zero or even negative. And yet, why isn't cryptocurrency taking off as had been expected?
Why hasn't, I will say, the real money, all the real big real money coming in? And to understand that, let's just use the equity asset classes or credit asset class. So real money can only take a certain percentage of the market or a certain percentage of a deal. They need the liquidity that is there. And that's the amount that there's a certain amount allowed to be put in. So if we say the market is 200 billion, let's just say, someone can't come in and take 10 billion of that market. That's 20x the market. People just can't do it. 1 billion, half a million, so the asset class is still small. So as the asset class grows and the liquidity grows, more people will come in. More people will invest. As regulation comes closer, which we've seen that in a lot of countries, regulations are coming closer. Again, more investors come in, stick their toe in the water, feel comfortable, and invest. This is a hiccup in the road, and it'll continue the road. The technology is amazing in general behind this asset class, and so we see this being the digital security space, being the next growth area. Let's see what happens now after this crisis.
They're all digital assets, intangible. What makes one cryptocurrency better than the other? Or more credible, more reliable?
Okay, I think it's saying more credible would be it. So some tokens will be asset-backed, so clearly it's the asset that dictates the pricing. Others, stable coins, you could say they're asset-backed. If they're truly asset-backed, like it pegged against US dollars, something is USDC, where it's an audited dollars that are sitting in a bank against that. So those are stable coins, which is a little bit easier to work out their valuations or where they should be going. There's others that are utility tokens where you would get discounts. I'll use that as an example. Really, you have to look at it from a fundamental point of view. What's the true value of it? What's the tokenomics? But I would compare it to when I was looking at internet companies in the 90s or whenever they weren't saying, how could it be worth that much? It's not making any money. Then you figure out after 3 years, you're like, oh, I wish I connected the dots. In the crypto world or in the blockchain world, you have to connect the dots the right way and understand the networked effect. So it isn't easy. How many people will use that protocol? The more people that use that protocol, we all know that the more valuable it becomes.
Credibility aside, security is another issue. User funds can go missing in the blink of an eye. As bank robberies migrate to cyberspace, some $600 million worth of cryptocurrencies went missing over 2 incidents in Japan in 2018, and an estimated $40 million got hacked in March 2019 from Binance, the world's biggest cryptocurrency exchange in terms of trading volume. There are a lot of concerns about cybersecurity. We saw what happened to some cryptocurrency exchanges in Japan, hundreds of millions of dollars just hacked. Really hacked.
Yes.
What are your thoughts about that? You guys are trading in an asset that could actually, vanish.
That is correct.
And you don't even need guns.
That's true. That is a risk. And what we've seen over the past 6 to 9 months is the security has improved so much because the technology's improved for the security. But we've seen a couple Japanese exchanges have security breaches and lost some tokens. Now they have paid all their investors on that. I think technology will keep on helping with the securities as we move forward. But what it does, it gives you more of a peace of mind that there is a backstop.
2 years ago, when you got involved with JST as a partner, you saw cryptocurrencies as the future and it blew you away. Did you expect to go through this rough and tumble?
Actually, I did. The one thing that attracted me and really confirmed why to start the company was the technology. The blockchain technology I thought was amazing. I believed that technology will be the future in certain parts of the industries. Payments sector, I think it will eventually get there. I think governments take time to accept new technologies, as do regulators, as do investors. But the entrepreneurs will jump in those and try and keep on developing them. So that's what really attracted me to this over 2 years ago. And I said, wow, this is an amazing space. But when I first looked at cryptocurrencies, it confused me a bit. And I saw all these coins out there and I'm trying to figure out explain this to me. Why is this coin worth anything? Clearly, it's gotten a lot more ethical. And it's really helped that certain countries and certain regulators are trying to set a precedent and put some guidelines in. Some are moving quicker than others. But you could see the direction that it's going. And I think that's very important for the growth.
There's a lot of pessimism out there in the market. You know, one day you see markets go up 8%, another day they crash another 10%. You need some real strong stomach. Do you think that the world of finance as we know it has forever changed? How do you view this latest crisis from the coronavirus?
Yeah, this is a very unfortunate crisis. But as all crises, they go away, right? They will go away and we'll get back to normal. The global economy is going to take its hit, but we've seen this before. We've seen the game, unless there's something I'm unaware of, and we will eventually come back. It's just a question of the amount of time, depending on whatever industry you're in. I hope that they survive, and I hope everything works out for them. But during this crisis, we will come back, and I think the digital asset space, okay, which cryptocurrency is a part of, or the blockchain, which is the technology space, is going to continue to grow.
I hope you get some sleep.
Yeah, well, we will get sleep during this time, but the one thing is it's a roller coaster ride. There's times that is not as fun, but there's times you're on the top of that hill and you're going down and you're just absolutely having a blast.
As Bitcoin, Ethereum, and XRP bounce off their recent lows in what crypto fans take heart as signs of decoupling, it's tough to know whether the worst has passed from a global pandemic that's certain to bring about a broad recession. A wave of stimulus measures to rescue battered financial markets may have stemmed manic selling for now, but without a vaccine in sight, more sleepless nights could be in store for Todd Morakis and Curran of JST Capital, and we wish them the best of luck. Hope you were able to get some insights into the world of cryptocurrencies. Much appreciate you tuning in, and join us next week on Maverick Dreamers and Thinkers as we meet an engineer turned CEO who figured out a way to monetize patent data to transform a fledgling startup into a market leader with more than 800 staff in 3 continents. Stay tuned. Do share this podcast with a friend and give us a quick review. And if you're on social media, reach out to me. Let me know what you think of the podcast. I'm Chloe Cho. Never stop dreaming.